Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 8th day of October 2019, and this is the daily report for gold and silver. Interesting statements made by Chairman Powell today definitely had a bullish influence on not only the dollar, but also on the safe haven asset gold. It also put some pressure to the downside in U.S. equities markets. We currently have a trade. We'll discuss that along with our stop, as well as our exit strategy and what I expect over the next couple of days when we pull up our technical studies. But first, let's take a look at current pricing. Over the last couple of days, we have definitely focused on the fact that there are upcoming events that could have a profound influence on the financial markets. Chairman Powell is one of them, and of course, the negotiation between the United States and China is the other. We've seen some gyrations also. Today, we do have a higher market, I believe mostly because of statements made by Chairman Powell that have been interpreted as bullish for the dollar and bullish for gold. Gold is currently fixed at $1,511.50, and that's after gaining $7.60 today, an increase of about 0.5%. When we look at silver, $17.79.5, putting it up about 9.5 cents, and also about 0.5% gain on the day. And that is all with a modestly stronger U.S. dollar in terms of the net change today, although it has been incredibly strong as it continually approaches 99 on the dollar index. Platinum and palladium were also higher today, with platinum having the largest percentage gain, 0.72%, 894.70, and lastly, palladium futures, 1649.80, after adding $3.50. Let's take a look at our current technical studies. As you know, we are long the December contract of gold, currently long at 1506. We do have a stop, and that stop is rather loose. We have not moved it yet. Reason being is if we do get some real volatility, and as I believe now it will go in the direction we are anticipating, we need to give it a little bit of flexibility. We entered the trade on this particular day. We put the stop just below that current low. Of course, the low that came in was roughly at 1480. We have a stop at 1478.13. The nice thing in terms of when we look at today's action is the fact that it is currently just at or slightly above the 50-day moving average once again. It has definitely been oscillating below as well as above and then back below. But the key, as far as I'm concerned, is the fact that it is absolutely trading within the parameters of the 50-day, and that to me is significant. Now, in terms of where I think we could go and where I am looking for some potential resistance, there's a short-term and a long-term view of this. In terms of the short-term view, I believe that we could see a series of waves, assuming that we're in a wave 5. Assuming wave 5 started here, we might get something like a wave 1, wave 2. This is not to scale by any means, a 3, a 4, and a 5. I truly believe that if we are in a fifth wave, we will inevitably take out this price here, which comes in at around 1561 to 65. But how it will do that and what the time parameter will be is a definitive unknown. More importantly than that, we are at a really critical area, and a critical area on a very, very long-term basis. And traders, when we look at this simple candlestick where each candle represents a month, you can see that in essence I have put in two key or critical areas. They're not Fibonacci based, but they are simply based on a series of tops and bottoms. We have one that comes in just above 1,000, and that of course is key and critically important because as we had the multi-year sell-off that began after mid-2011, after we had achieved the all-time record high, the point in which gold found support and started to trade higher is this particular price point. That is key. That is important. We can see how that matches up roughly in this area, a little bit here. Now, there's also one other area, and that area is the area to me that warrants the greatest amount of attention, because what we are looking at is a price point that is roughly just above 1,500. Now realize this is a monthly chart, and when we expand it, you'll see what I mean. But after the market ran from 700 to 1,900, it spent the next year, year and a half oscillating between a pretty wide price range, with the top at 1,800 and a bottom, you can clearly see that, at roughly 15. I think it was about 1534, but right in that area. It traded in that defined range until it broke to a new low, and that of course came in right here. We have been hovering around this key level for quite some time, now 3 months. If we break above, call it 1534, we are certainly headed higher. We are certainly in a fifth impulse wave for this rally, somewhere between $1,650 and $1,700 per ounce. Today, October the 8th, marks a very important day in terms of the Jewish calendar and holiday. It is the Day of Atonement, and I do want to wish all of God's people health, happiness, and prosperity during this next upcoming year. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.